Welcome to This Explainer. Everyone is always obsessing over the stock market, right? Or tracking interest rates, or waiting for official government reports to tell us if a crash is coming. But what if I told you the ultimate early warning system for the global economy is literally sitting on your front porch right now? Yeah, we're talking about the boring brown cardboard box. Let's get into it.
A lot of folks just assume precious metals are the best early warning sign of an impending economic disaster. You might think gold is the ultimate indicator. But honestly, gold is just reactionary insurance. It's the thing people scramble to buy after the danger is already in plain sight. That's exactly why its price tends to spike after the damage is already done. By the time gold is making headlines, the blow has landed. Cardboard, on the other hand, is a literal time machine. It actually predicts the future, because it sits at the very front of every single decision to build or ship anything in our physical economy.
Section 1. The Ultimate Warning Sign. Let's explore why a boring brown box holds the secrets of global trade. Here's the crucial thing you have to remember. Products absolutely do not move instantly. To get from the factory floor, onto the trucks, into the regional warehouses, and finally onto your local store shelves, well, that entire system runs on a highly regimented 3 to 6 month schedule. Think about it. Before a massive television or a pallet of groceries or car parts can ever be shipped, someone has to order the boxes to put them in. The boxes always come first. That means if you want to know what the economy is going to be doing 3 to 6 months from now, you just have to look at what the box makers are doing today. And what they are doing today should give everyone pause. Which brings us to Section 2, the Great Cardboard Collapse.
The sheer catastrophic scale of what happened to this industry in 2025 is honestly just shocking. America's biggest box manufacturers permanently shut down roughly 3.9 million tons of production capacity. That is roughly 10% of everything North America can make. To wrap your head around what losing a tenth of that capacity actually means, just imagine 4 of the absolute largest box mills in America being completely demolished and never ever coming back.
Just to put that into some historical context for you, a single year of shutdowns in 2025 was almost double the cuts following the 2008 financial crash. And remember, 2008 was the worst economic collapse since the Great Depression, slashing nearly twice as much capacity as they did back then. I mean, that is certainly not the action of a healthy market. Mills simply do not shut down like this during a normal, routine economic slowdown. No way.
And we are not just talking about a one-year blip here either. If we trace this timeline from 2023 to 2027, we are looking at one of the largest sector contractions analysts have ever recorded. By the third quarter of 2025, U.S. box shipments cratered to their lowest level since 2015, effectively erasing a solid decade of growth in a single year. And the crazy part? They aren't done. 3 million more tons are expected to just disappear by 2027. Now, behind all these massive tonnage numbers is a very real, very harsh human cost. It was an absolute cardboard bloodbath. You had International Paper shutting down these massive mills in Georgia and Louisiana. Smartford WestRock shut down operations in Minnesota and Texas. All told, we're looking at over 4,500 jobs lost across the US and Europe, with even more layoffs lined up for 2026. This is literally the equivalent of an entire mid-sized factory town wiped off the map in about a year by the big 3 box makers. And they're just walking away from infrastructure that took billions of dollars and decades to build for one simple reason. The orders simply stopped. Now you might be wondering, why does a dark, abandoned mill in rural Louisiana actually matter to me? Well, it comes down to the hidden costs folded into your daily life. Roughly 75 to 80% of all consumer goods spend part of their life inside a corrugated box. Packaging eats up around 8 to 15% of the price of food and drinks. So think about a $5 box of cereal. Up to 40 cents of that is just the cardboard. You're buying $4.60 of cereal and a 40-cent piece of trash. When cardboard gets scarce because these mills are closing, that cost climbs. And trust me, nobody absorbs that cost for you. It lands directly on your grocery bill, just a few cents at a time, until suddenly everything feels just a little more expensive. Okay, let's look at the mechanics behind this disaster in Section 3, unpacking the bullwhip effect. Why did these huge mills have to close their doors in the first place? It all comes down to something called the bullwhip effect. Think of an actual bullwhip, right? A tiny little flick of the wrist at the handle creates this massive, destructive crack at the far end. Well, in the supply chain, when retail giants like Walmart and Target way overordered during the pandemic because demand briefly spiked, they ended up buried in excess inventory. So they did what any retailer would do. They suddenly slammed the brakes on new orders to clear out their packed warehouses. And that sudden stop? It sent a massive shockwave all the way down the chain.
Let's break down how this chain reaction builds. First, a simple destocking cycle at the retail level forced the box suppliers below them to idle their production lines. But because that freeze lasted so incredibly long, the mills at the very bottom were forced into permanent closures. And here's the scary part. A closed paper mill isn't a pause button. You can't just flip the switch and turn it back on. The giant machines get dismantled, the workers leave, it resets the entire system's capacity to a permanently lower baseline. The damage lingers long after that initial retail slowdown ends.
And hey, this isn't just an American problem. This freeze is choking the biggest factory engine on the planet. Get this, China's imports of corrugated paper, which they desperately need to make the boxes that ship goods to Western shelves, dropped nearly 18% in 2025. This means fewer containers are actually crossing the ocean, which directly leads to thinner stock and much firmer prices on your local shelves. The physical framework of world trade is, quite literally, being taken apart in real time.
So if the very container that carries almost our entire physical economy is being dismantled, why does the official news keep telling us the economy is perfectly fine? Welcome to Section 4, a divided economy.
When we actually break down that official 2.0% GDP growth from early 2026, we see a massive, glaring contradiction. The economy has split cleanly in two. On one side, you have this roaring boom in AI, tech spending, and federal government money. This massive wave of cash going into server farms and chips is dragging the economic average way up. But on the flip side, we have a very real, very deep slump in the goods economy, which happens to be where everyday people actually live and work. Actually, scratch that. If you were to strip out the AI boom and the government bounce, the real growth of the economy would have been basically flat.
And we are seeing this strain showing up directly in household finances. The U.S. personal saving rate plummeted down to 3.6%, hitting its lowest point since October 2022. What does that actually mean? It officially means ordinary households are only keeping up their current spending by saving less and less, not because they're earning more. All of this is happening while fuel costs and those hidden packaging costs we talked about earlier just keep pressing down on what families can actually afford to put in their grocery carts.
The official numbers aren't exactly lying, but they are absolutely hiding the truth. Like the quote says, the headlines say growth, the boxes say otherwise. They're mixing a very real slump in everyday physical goods with this explosive boom in artificial intelligence, and then reporting that average as if it reflects your daily life. It doesn't. It describes a server farm's life. We're entering a long stretch of low growth and high costs, where your paycheck just buys a little bit less each and every month. And the box makers? They didn't wait for the evening news to confirm this crisis. They saw it right there in their order books and shut their mills down.
The box makers have already made their call. The early warning sign isn't hiding in some complex Wall Street algorithm. It is sitting on your porch right now, and it costs absolutely nothing to look at. So, as we wrap up this explainer, I want to leave you with this question to chew on. The next time you pick up an Amazon package off your doorstep, ask yourself, what is this box really telling me about the future of my wallet? When you see fewer of those brown boxes moving around your neighborhood, you need to understand that the first link in the chain is broken. Keep your eyes open, guys, because what happens to the cardboard today absolutely happens to your wallet tomorrow.